information contained in this video and/or audio is provided as is for educational and informational purposes only and should not serve as the basis for any trading or investing decisions. Little Grapevine makes no representations and disclaims all express, implied, and statutory warranties of any kind to any viewer or other third party. Neither Little Grapevine nor any of its affiliates makes any endorsement of any particular company, security, product, or financial strategy, and nothing contained in this video and/or audio should be construed as investment advice. Please be aware that we and participants viewing presentations and/or live webcasts and engaging in Q&As may own, buy, or sell shares of featured companies. Investors should undertake their own due diligence and carefully evaluate companies before investing. Please see safe harbor statements of companies participating in Little Grapevine events by viewing their videos and slide presentations at littlegrapevine.com.
Hi, I'm Maj Soueidan, co-founder and CEO of geoinvesting.com, and I often participate in Fireside Chats with and moderate presentations and Q&As for companies that have joined the Littlegrapevine.com network. Little Grapevine is a platform that gives high-quality microcap companies the opportunity to both formally and casually interact with investors. The following discussion with Dennis Becker is with Dennis Becker, founder and CEO of Mobivity Holdings Corp. For anyone new to Mobivity, the company trades on the OTC under the ticker MFON, that's Mary, Frank, Oscar, Nancy. And the company develops and operates a proprietary platform that helps partners conduct and data-driven marketing campaigns, helping us engage better with their customers. The company also works closely with point-of-sale systems and restaurants to create dynamic offers. As you may know, Mobivity's initial presentation and Q&A was published to Little Grapevine on September 30th, 2020. And I participated in a follow-up Fireside Chat with Dennis on November 18th, 2020. Both videos can be viewed at littlegrapevine.com. Today, I speak with Dennis about Mobivity. He revisits some of the business operations, offers some perspectives to new investors, talks about current developments and what's been going on at the company since our last conversation. So I think it was a really good interview. Dennis really digs into some of the current dynamics going on in his environment that he competes in and operates in with Mobivity. And I think it's going to be a great kind of good piece of research for you if you're interested in this company and in the markets that the company's playing in. Thank you and enjoy. Well, thanks, Dennis, for being here today for a follow-up on a Little Grapevine. I'm Maj Soueidan, co-founder of GeoInvesting, and was asked to come here and moderate the discussion here with Dennis. Dennis has been on the show, or on the Little Grapevine network before with his virtual presentation and a follow-up call we had with him, a Fireside Chat. And so, Dennis, welcome back.
Thank you. Glad to be here.
Yeah, great. And I just want you, I want to basically take this opportunity to kind of follow, maybe catch some developments from since we last talked. I think we talked in November, and there's been a lot going on in the company. You've had some changes in your staff. You've had some partnerships, and so I want to get into that a little bit, and then maybe get into some questions about just the current state of the business, given where we are with COVID-19 now.
Absolutely.
Great. So yeah, I think I want to get into some of the managerial changes you made here. I think you appointed a new CFO and a new VP of enterprise sales. And what was interesting about reading into both of these individuals, they both have a SaaS background, I think.
Yep.
And interestingly, they have some exposure to the restaurant business. And I was wondering, if you could talk a little bit about their experience and what you think it brings to the company. And besides just their roles of, their titles, I think they might have some relationships maybe they might be able to bring to the table too.
Yeah, no, absolutely. So, at the chief financial post, we were really excited to bring Lisa Brennan on board. And most relevantly, Lisa led finance for a company called Merchant Customer Exchange, or MCX. This is a consortium of brands that included Target and Walmart, 7-Eleven, some of the restaurant brands, Darden Restaurants, which was operating Olive Mill, and some other recognizable brands. They came together years ago to collaborate on a mobile payments solution that was to rival Apple Pay. And the idea there is that now that payments are going digital, and with the advent of Google Pay and Apple Pay and using your smartphone to pay for things, there's just a considerable amount of data and relationship insights, as well as the ability to go direct in terms of currency, accepting currency for payment, and thus potentially, get outside of the traditional credit card payment networks and their fees and cost structures. So what attracted us to Lisa, and what makes her such a great fit for us is, I mean, if you can imagine running finances for a bunch of rival retail and restaurant brands, managing what was, I think, north of $150 million of investment capital that went into building MCX. She comes to our team bringing a lot of insight and experiences to how to manage, those relationships of really, the brands that we're trying to sell to, and understanding, how they approach finance and, some of the economics around what it is that, we're selling to the market. And then, of course, also, it's highly beneficial for our finance lead to understand our product and the problems that our product's trying to solve. So within the mobile industry, I mean, if you think about the digital coupons that we power for all of our brand customers, delivering scannable codes and text messages and, other solutions that we provide. I mean, those are forms of payment. When you bring those into a store or you add that to your online order, it's a currency. So she understands all that. Beyond that, with an MBA from MIT and, a math background, there's a lot of intellectual horsepower there as well. So we're really happy to bring Lisa aboard. I think that it really upgrades our organization, sets us up for the next, several levels of growth.
Excellent. And you think there's going to be obviously more financial metrics you'll be looking at too, to kind of understand the business and measure the business?
Yeah, I mean, I think that it's great being a software company because, you can get very creative and dynamic in how you monetize your product. And so having someone like Lisa on board with the depth of financial knowledge and experience, coupled with, the industry background, having been at MCX, that's going to help us, we think, to be opportunistic and create new monetization opportunities for our products and our services with, the insights that she has and how those target markets that we're trying to sell to operate.
Excellent. Now, I know you also, I think there was it Tom Mullins was a new hire too, VP of Enterprise Sales. It's always hard. We always look at ourselves as we're building a new industry. We're providing a solution that really hasn't been done before. This digital transformation thing is very real. Brick and mortar brands are going to have to operate differently. They're going to have to engage consumers differently, which means they're going to have to use new products like ours. And so when those products are only a few years old, it's hard to find, sales reps and talent that have any form of experience selling solutions similar to ours to a market that's just figuring out that it needs it. And what's unique about Tom is he actually spent time at two of our peers in the industry, a company called 7 Rooms, which just raised $50 million last year. And then prior to that, a company called Punch, which I believe has raised north of $40 million. Both of those companies are out trying to, they're delivering digital platforms for consumer engagement, spanning from loyalty solutions to data, coupons, offers and promotion solutions, those types of things. So, Tom's been around this very young industry. And I think that it was a big recruiting win that, he chose to, bet his future on Mobivity. Man, cool. So that's just shoring up the management team. That's what you need to do for your next level of growth, I think. And I think you made some great decisions there. Now let's move over to some exciting stuff, maybe partnerships or customer kind of relationship news here, developments. The Partech, I think, was interesting. I think you announced a deal with or you call it a new partnership, right, with Partech.
Yep.
Well, they'll be incorporating your solution into their kind of digital solution. So maybe you could talk about Partech's product and how it fits in, how you fit into their product and what they're doing, and how you help them and make them a better company, and the opportunity you have for growth through that relationship.
Mm-hmm. Yeah, so PAR is a point of sale manufacturer. They're actually one of the longest standing point of sale companies out there. So that cash register that you see at the store, that's a point of sale device. It always surprises me that's not the layman's term, really. When people think about the cash register, they think of the cash register at the store. It's point of sale industry. It's really the workhorse of the physical brick and mortar operator. I mean, that's where the money's collected. In fact, a lot of shops, that's where time cards are managed as well. So hourly employees clock in and clock out of the point of sale platform. We also had a partnership developed this year with Oracle Micros. Micros is another large point of sale platform provider. So this is a trend you're going to see more of with Mobivity. What we did differently in terms of, well, let me take a step back. In order for this digital transformation to evolve and really get brick and mortar companies working like Amazon, they need to understand all of their point of sale information. So everything that's going through that cash register is throwing off data. It's telling you what's selling, what's not selling, for how much, how often. And there's a lot of consumer identity that touches those transactions too. There might be, if it's a credit card paid transaction, or if there's a digital coupon being used, that might also throw off an identity around that transaction. It turns out that there's a real big fundamental problem that the industry is going to have to get past, that we've figured out how to get past if they're ever going to operate like Amazon, where it learns over time consumer preferences so that it can optimize products and pricing so that the consumer wins and Amazon wins. If you think about Amazon, they've got one point of sale, their website. And there's really one checkout counter in the world of Amazon. Subway has about 43,000 checkout counters.
Right.
And so there's two very distinct problems that poses in terms of getting all that data and making it workable. Number one is just collecting it, and putting it somewhere, and putting it somewhere that's efficient to then use and leverage. And then that kind of leads to the second problem is usually that information is very fragmented. And by that, I mean, there are some brands, like I know there's one brand, it's a restaurant brand. I can't say who it is, but they have 23 different makes and models of point of sale equipment in their stores. So the data that's coming out of, point of sale A is not going to look like point of sale B, despite maybe it's the same product that's being purchased when the consumer's there at the cash register. So we call that normalization. So you've got to not only collect all that data, put it somewhere, but then you've got to organize it and make sense of it. The example I like to point to is take Subway. You could probably go to 5 different Subway locations in a 20-mile radius, buy the same sandwich. And if you look at your receipt, that turkey sub is spelled 5 different ways.
Okay.
So we've literally analyzed billions of point of sale transactions and then have applied machine learning to automatically categorize and normalize and organize all that information. And that's something that a point of sale company can get to a certain degree of competence doing, but they can't get as far as we've gotten because they can only work with their own data, right? So if I'm PAR, I've only ever seen data going in and out of PAR point of sale systems.
Mm-hmm.
Whereas at Mobivity and working with Baskin Robbins and Subway and Sonic and all these different point of sale or these different brands that use different points of sale, we've had the opportunity of seeing billions of transactions across all kinds of different point of sale systems. And that means that our machine learning trained algorithms can bring a lot of value into a retailer so that they can use that data to perform like Amazon.
Okay.
And so what we're able to do now is these point of sale partnerships is we're bringing that technology to that point of sale manufacturer. So
Okay.
now, PAR can go in and say, all right, you're not just getting a point of sale device, but we have Mobivity software that can help organize your data better. It can also give you consumer engagement capabilities through text messaging or digital coupons. So, this whole transformation that's going on in retail has to start with the point of sale. And so the way I kind of analogize it to is it's kind of like the point of sale is the operating system. And then companies like Mobivity are going to bring the software to make the operating system valuable.
But you're a true platform solution, really, if you think about it, right? I mean, if you want to think about it that way, right?
Yeah, that's a good way of putting it. And then, of course, for us, it means now, there are however many PAR sales reps or micro sales reps out there that are trying to expand their revenue from their customers. And, once you sell the point of sale, there's not a lot left to sell.
Mm-hmm.
But enter partners like Mobivity. Now there's additional tools that these point of sale companies' sales teams can sell to bring more value, to the relationship. So we view these partnerships as number one, giving us a faster access to market because now we can go market to those customers. And number two, our sales cycle and our velocity to revenue, because sometimes when we do installations with customers, the contract may not be generating revenue until we've completed an installation.
Mm-hmm.
So if we're already certified and partnered with the point of sale environment, that's all going to go a lot faster.
Right. Okay. Now their product is called Brink, right? Brink POS, I think, is the Partex product.
Yeah. I mean, you it's almost like we're going from DOS to Windows. I mean, going back to that operating system analogy, like the point of sale platforms now are becoming internet connected and cloud operated. And that's what these next generation products from companies like PAR with their Brink product, they're focusing on upgrading that point of sale terminal so that software companies like us can add applications to it.
So is it correct to assume then that, to conclude that, so the Brink product wasn't really an insight type of product. It was more of a transactional type of product. It was collecting data, I guess, to some degree, but was it really designed to, study customers and customer behavior, or is your platform now allowing that to happen?
Yeah. Yes. The latter. Our platform now allows that to happen. And again, going back to the operating system analogy, it's kind of like, the point of sale is going to have some basic functionalities, some I'll call it starter capabilities. But that point of sale device is a really complicated platform. And particularly now that brands are also allowing customers to order online or through apps, those orders have to talk to the physical point of sale so that the store knows to make the sandwich or whatever that was ordered online. So that's a lot to deal with. The point of sale manufacturers have to focus on security, payment processing, internet connectivity, online storefronts. So they're going to be all consumed focusing on kind of that core functionality. And then all the value add around that, if it's, mobile marketing or loyalty or digital coupons, things like that, that's where companies like Mobivity are able to just innovate collectively much more quickly and broadly, bringing more value to the point of sale environment. So you'll see a lot of point of sale vendors like PAR and Oracle creating these partner ecosystems where they can bring in best of breed partners for all kinds of different solutions.
Okay, and then I'm assuming that you are their only solution for this in terms of partnership.
Yeah, I don't know if that's that's not explicitly by design. We just happen to have a unique solution, so I wouldn't compare another platform out there that or partner to PAR that's quote unquote competitor to Mobivity's. But it's still, it's early innings right now. I think right now, all the point of sale companies are just racing to get their partner programs off the ground.
Right.
And to get, because there's an arms race. You look at companies like Lightspeed, and both with PAR and Lightspeed, they've, I think that the market appreciates the magnitude of this digital transformation kind of thing going on, and how point of sale companies are a big part of that. So, but it's now turning into a bit of an arms race.
Okay, excellent. So I wanted one last thing on this, on the relationship. I want to understand more about the implementation, how it gets implemented, how fast it gets implemented, and what is there, who has to go after the customers? I mean, are just giving you carte blanche to go after the customers, or is their sales team going after these customers and then giving you a warm handshake to them? So I want to understand more of that process, and then maybe how that sales executives might be incentivized to sell your product or to add your product to their platform.
Right. Well, right now we're collaborating with the marketing teams. So we're working with the marketing teams over at PAR, also at Oracle Micros, and creating a lot of the marketing foundation so that there's content, sales collateral, other types of pieces of information that help to train both respective sales forces. I mean, we end up being in conversations with brands that are looking for a point of sale solution as well. So we have to be well educated on their products, and they have to be well educated on our products. But right now, in kind of this phase one, we're past what I'll call the technical and product integration, and we're on to the marketing planning phase, which will be, okay, now let's organize our respective sales teams and our sales pipelines, and let's make sure that they both have the tools that they need to go out and have intelligent conversations with the market and convey value. And then I think over the next year, that will then mature to where compensation starts becoming architected into those activities. In other words, we might receive incentives from our point of sale partners for helping land point of sale deals, and vice versa.
This might be maybe this question doesn't make sense here coming up, but since you have this relationship with now PAR, I mean, are there going to be other services you can offer outside what PAR is doing with these customers? I mean, you're touching these customers through PAR now, maybe these new customers. Are there things you'll be able to do on the side that you're not doing with PAR? Are there other solutions that you can offer these customers outside?
Yeah, no, I mean, it's a good question, because I think it illustrates something about our platform, and that is that optimally we are integrated with the point of sale, and we're working with all of that data, et cetera, et cetera. At the same time, there's huge benefits if the brand just leverages our mobile messaging capabilities. In other words, creates a text message program that consumers can opt into to receive, special deals and digital coupons and all these things that really don't have to necessarily be connected back to the point of sale data. For the longest time, we've had customers where well, I would probably use Sonic as an example. Sonic's a very large customer of ours that exclusively uses our text messaging capability. And for whatever reasons, we're not really doing much with their point of sale environment. Okay. So that's an example of where we don't necessarily have to integrate with the point of sale to create a subscription agreement and get into a revenue opportunity with some of PAR's customers.
That's excellent. So now, one of the things I want to talk about here was how a lot of investors view the company. Just from a bird's eye view, a lot of them, and we talked about this before, that they assume you're just dealing with restaurants. And I think you made it clear in other conversations that no, you want to broaden that. You are broadening that kind of landscape, and you have. And one of the things you did, one of the partnerships, I guess, recently, kind of takes you toward that direction. Maybe you want to talk about that. You didn't announce the name of the partnership, but maybe you can talk whatever you can about that partnership or relationship.
Yeah, it's interesting. The fastest growing food service category is the convenience store market. Mm-hmm. I think we've all been into Circle K's or 7-Elevens, or on the East Coast, Wawa's a great example where you're getting your fuel, you can get sandwiches and some groceries, et cetera, convenience stores make perfect sense. We at Mobivity, when we think very kind of audaciously about how big we can become someday, we don't find what industry wouldn't use our products and services out in the brick and mortar. So at the same time, we have a very kind of deliberate, bowling alley focus on going from vertical to vertical and leveraging our experience and success from one vertical into the next. And going from the restaurant industry, particularly with our heavy footprint and quick serve, over to convenience is a very natural transition. And we also have this partnership as the mobile marketing, digital marketing platform partner to Pepsi's digital lab. It makes a lot of sense there too, because obviously Pepsi's doing a lot of business in the convenience store space.
Right.
So we're really excited about the convenience store industry. There's not as many locations as the restaurant space, but there's still 100,000 plus locations out there across hundreds of brands just in the United States. You get out internationally and it gets even bigger than that.
Right.
And so that sets up for a pretty exciting market for us, that we are very similar to how we've grown in the restaurant space, starting with a major brand, the second largest convenience store chain in the world. We are actually now launched with them. They are running programs. I think that we'll be able to go public in revealing the identity of the partner here pretty soon.
That was the next question.
Yeah. Well, they wanted to, and rightfully get these programs off the ground. And one of the things that is notable about that relationship was, they had a multi-billion-dollar telecom company that was operating their text messaging program, that they terminated and moved those services from that multi-billion-dollar market cap company to Mobivity. So we were pretty proud of that as a competitive win. And of course, in that process, since there's a transition phase, we had to be kind of sensitive to that. And so that's why, we're able to let people know through the press that we won a significant customer in that vertical, but we couldn't quite yet identify who it was until we got past, the deployment and the launch. And they've got some really cool programs going on. I mean, they've got programs where guests are getting text messages with virtual Scratch It games, where you basically swipe your thumb over these interfaces. And it's almost as if you're playing a physical Scratch It, game on your phone. But so far it's been very successful. They're asking us to do more and more. I think that there's a lot of upside in that relationship. And once we publicize the relationship, it's also going to put a big flag in the ground in that vertical and give us the credibility to expand in that vertical.
Excellent. All right, so let's move on now to real quick. You had the warrant exercise, early exercise. Then you issued some more warrants, I guess, right, as part of that. So can you maybe just really quick maybe talk about your balance sheet, where you are now with that, and how are you comfortable being able to execute your growth plan again without raising too much money moving forward?
Yeah, we looked at kind of where we were finishing the year. We looked at what's in front of us. As a part of that warrant conversion, we also converted about $1 million worth of debt. And so I think that, you could probably, we don't have official numbers out yet, so I'll say the disclaimer with that. But I mean, I think if you looked at the balance sheet and you wipe the debt and you wipe, you put the capital in from the warrant conversion, it probably suggests that our shareholder equity flips positive. We've thought about the company's listing situation.
Mm-hmm.
And so just, as a part of this evolution and building upon, first and foremost, we're focused on the business success and growing the business. But with that, followed some corporate development opportunity there at the end of the year to really upgrade the balance sheet and set us up for some options, if we continue to execute on our plan going forward into 2021. So, there was only a handful of those warrant holders. They've all been longstanding shareholders in our company. They've been great partners for us. So we were able to strike a deal there, and we're gonna have a much better looking balance sheet when our 10K comes out here.
Excellent. All right, so now I got some questions from more detailed questions from the Littlegrapevine. I'll just read them off to you, and we can just go one by one of these.
Sure.
So a lot of attention recently has gone to Mobivity's restaurant and retail solution with recurrency. But another part of the business is messaging, and specifically messaging outside of the restaurant sector. We kind of talked about this, I think, a little bit here. Can you talk about what you do with mobile messaging and maybe talk through the Tyson's food example?
Yeah, mobile messaging it's like the new black. It's this technology that's been around forever, and in fact, it's in our DNA. Mobivity, for a time there before we pivoted the business model in 2015 and switched to helping with digital transformation and brick and mortar. We were the text messaging partner for the NFL. We powered all the NFL.com fantasy football alerts. We powered the Super Bowl MVP voting, CNN, Turner Broadcasting, the NBA, Disney. I mean, we did a lot of text messaging back in the day. And the reason we pivoted to where we are today is because in sports media and entertainment, text messaging was kind of a nice to have, not a need to have. And so the revenue and kind of the SaaS model wasn't there for us, that we've now zeroed in on in the brick and mortar and retail and restaurant space. That said, what you're seeing is that whereas a lot of industries have been focusing on apps and email, really that's all kind of played itself out, and now text messaging is starting to become the new hot channel. So you'll see more of this out there in traditional e-commerce businesses where, Crate and Barrel, you'll show up at their website and the first thing will happen is it'll pop up a window offering you 10% off of your purchase if you input your mobile phone number. But once you've done that, they have a much more reliable communication channel now to reach you on. And the reason that this is happening right now is because there's a lot of movement by Apple and others with regards to privacy. And it's you may not appreciate this, but when you're using apps on your mobile phone, the operating systems now, particularly Apple, are hiding your identity to protect you. And so it's just becoming increasingly challenging for brands to stay connected to their consumers because they can't use a cookie anymore. Cookies are going away. There are all these privacy changes that are happening. And an email has just become a spam junk folder, low efficacy channel of communication. Whereas with text messaging, you've got a medium that's, the average consumer checks 40 plus times a day. 95% of text messages are read within the 15 minutes of getting them. A lot of people say, well, isn't text going to go the way of spam? Well, it really hasn't yet. I mean, there's some bad players out there, and that's because of this 25-year-old law called the Telephone Consumer Protection Act that it makes it very financially painful to get caught sending unwanted texts. And that's kept the channel pretty clean. So what that means to Mobivity is that all of a sudden that I just did an interview for a study coming out with Forrester. And, they were saying that their inbound inquiries on text messaging service providers is up 10x. Wow. So text messaging is finally having its day, and that happens to be something we're really good at. Right. So we think that that's also going to allow for us to be opportunistic. And if we get a brand, we came very close right before COVID to doing a deal with the major online streaming service. Again, if you think about people sign up for something, maybe they're almost checking out, but they abandon their shopping cart. Like, how are you going to get back in touch with them and bring them back to the shopping cart? If they haven't tuned in 2 weeks, they're probably going to become a subscription cancellation risk. How do you talk to them?
Right.
And text messaging is just a really powerful way, probably hands down the best way to stay engaged with that consumer. So we're seeing that rising tide. And that doesn't require new product development on our end or anything like that. I mean, we can stand ready to be opportunistic when meaningful deals come our way to enable any kind of brand with the benefits of text messaging.
I know at GeoInvesting, we talk about that all the time. Is like, how can we we do a lot of our communication through email and even through our marketing, and we've been discussing how can we use text messaging to kind of reach investors who might want to utilize our services and stuff. So
we just did a campaign for a pizza brand, and the text, they did an A/B test. They sent the same offer out via email and the same offer via text messaging, and they had a 61 times higher response rate from the text message offer over email.
Totally makes sense, man. So it definitely, this is where things are going, right? I mean, it's quicker. Yeah, you trust it more, I guess, as a consumer when you get it right. So it's a little, I definitely see it. Now, I guess another question, a follow-up question to that was, walk us through your model for messaging. How do you do the pricing? What are some of the important KPIs you're tracking?
Yeah, so with text messaging, it seems like such a simple service, but there's so much to it. And particularly nowadays, because we can do multimedia messaging, we can send pictures and videos. We were tapped by Google to partner with Google and help them evolve text messaging on Android phones. So Rich Communication Services, RCS, you'll have seen a couple of press releases earlier this year where we ran some RCS campaigns in partnership with Google and Sonic and some other brands. And RCS is killer. It's you get all the buttons and the interfaces that you would see in an app in your text message inbox. At one point, we built a full-blown sandwich ordering interface for Subway as a prototype, where you could literally within a text message, like build your sandwich, pick a store, pay for it, and go pick it up. And so all of this, is IP that we've built, inclusive of throughput. Throughput's another big deal. You want to get, you want to send 2 million people a lunch offer at lunch and have that text message actually get there, within the lunch hour. That's really hard to do. All of the subscription management and the things that are going to keep you out of hot water with the Telephone Consumer Protection Act, and opt out and carrier deactivation lists, if somebody moves their phone number from Verizon to T-Mobile and so on and so forth. So we've just built all that IP. And it depends on how much of that IP the brand is going to use, and that drives the economics. So in other words, if it's a 50 location pizza chain that is only ever probably going to get, call it 50,000 consumers subscribe to a program, and that's not so hard to send those text messages all at once in a timely fashion, and they're not going to have a lot of TCPA exposure, and maybe they're not going to do sophisticated multimedia messaging, they're going to pay X, right? If a larger enterprise that needs to jam 2 million messages within seconds out to, an audience with sophisticated multimedia, like you should see what we do with Sonic. Sonic's doing that a lot. They have millions of consumers in their database. They're sending these really, really good looking multimedia messages, et cetera. They're going to pay more than X. And it's usually set up on a per subscriber basis. So in other words, and so that allows us to create a recurring subscription revenue stream. So if a brand ends up with 1 million people in their database, we might charge them, 10 cents per month per subscriber. And within that 10 cents, that gets them a certain number of messages and certain types of messages that can be sent, each month to that subscriber list.
Excellent. All right, so let's move on to the next one. Obviously, we're still in the pandemic. Vaccines are being rolled out. Certain states are more open than others. What are you seeing and hearing from your restaurant partners? How is operator sentiment, and what are you hearing in general?
The bad news is the small restaurant operators are really suffering. They're the ones that don't have a network and a royalty fund that might be able to come to the rescue. Independent restaurant operators are really suffering. In-store dining, sit down, family dining, that's also had a hard time. Fortunately for us, we've really been focused on quick serve and fast casual. So those are areas where, Sonic's business was up 30%, which is unheard of. In the restaurant space, if you're up 5 or 6%, you're winning awards. So to have a 30% boon in the middle of a pandemic, but there's reasons for that, because as sit down restaurants and other businesses go out of business or sidelined, if you want to get your food fix and get out of the house, Sonic's a great venue to do that because it's all drive in and drive through.
Mm-hmm.
What we're also seeing is there are a lot of businesses in the middle. Take Subway, for example. There's not a lot of drive-through Subways. So they're quick to mobilize on curbside and remote ordering and pickup, which has all been a boon for us because these are all areas where we can help. When you show up curbside to pick up your food, what a great way to check in and let them know you're there through a text message.
Right.
When your food's ready, get a text message. Remote ordering and low contact, digital coupons and the codes and things of that nature. We power that platform for Subway, whether you're redeeming a coupon in an in-app purchase or you're ordering your sandwich online and you input a coupon code that's powered by Mobivity. So helping remote and digital ordering is something that has put Mobivity right into the solution set for how these brands are trying to survive and thrive. And then also the surprise was our receipt product. So, as you know, we can take over the printed receipt and put targeted advertising on the printed receipt. When COVID hit, I thought, oh no one's going to want to touch anything.
Right.
But what has happened is that a lot of these brands and a lot of our customers' proportion of takeout and delivery has grown tremendously.
Right.
And guess what has to go on that bag? So
Right.
it can identify whose food is whose. And all of a sudden the receipt is an essential part of the packaging.
Mm-hmm.
And, our ability to customize that receipt with real-time information and put targeted advertising is a lot of value. So it's actually all played out, very, very good for our products.
Now, so you mentioned, because this plays into one of the other questions we had here, is you mentioned that we're working with maybe some larger chains or larger customers, and maybe some middle market customers. So do you work with, like, how small do you go? I mean, what are some of the smallest customers you'll go for, and is there opportunity there that's not being targeted? Even though there might be a shaky ground financially, and coming out of the pandemic, there might be some opportunity, I'm assuming, to capture some new markets there.
Yeah, well, I mean, we'll lean on our Pepsi partnership for those types of customers where, most of the selling and whatnot can be done kind of outside of the Mobivity resources. In other words, the cost of selling a 1 or 2 location restaurant is about the same for us as selling a 100 location restaurant.
Right.
So we kind of get the law of diminishing returns once you get down to the kind of mom and pop shop, independent and small. However, with partners like Pepsi, that allows us to get to that area of the market. And there are parts of our product that are very easily consumed at that level of the market because it doesn't require a lot for us to deliver the product either. Our Belly digital loyalty product, I mean, it comes in a box. And it's an iPad that you put next to your point of sale, and you're kind of in business with loyalty. So we have the ability to serve the independent and the kind of the SMB space. It's just how we access that market. It's really through partnerships.
Okay. Now, back to that, the buzzword platform, right? I mean, everyone talks about having a platform in the software business. And is there a situation where you see that a customer could come to Mobivity.com and just sign up for the account and start paying using your products without even talking to a salesperson?
Yeah, well, you can do that with our Belly loyalty product.
Mm-hmm.
And by talking, I mean, you'll sign up and then you'll get an email confirmation. We're sending a $200 iPad, to your place of business. So there might be one phone call involved
Okay.
before we ship that out. But, with text messaging can become, similar. But I think actually, we're really focused on enterprise customers. And what we can do, and this is similar if you follow Twilio, or if you're familiar with Twilio, we can take the components of our product and give it to IT departments through, APIs and development kits. So we could launch a service where technically, you're going to our website, you're saying, look, I want to use text messaging at my business, but I've got some developers in-house and we want to create our own. So we really just need the Mobivity platform and the plumbing in order to go build our own messaging solution for Bob's Burgers. That we're capable of providing a version of our product like that, today.
Excellent. So moving on here. There's a lot of attention on the federal minimum wage. This will affect the hospitality industry perhaps more evidently than any other industry. Does a higher cost of labor create an opportunity for Mobivity? And what should investors tune into as this legislation develops?
Well, boy, that's almost a religious. I've been hearing this debate now for 3, 4, 5 years. With there's mixed data out there. There's operators who've I think I was just reading a Wall Street Journal article, and Fresno, California is already at like 14. Because the 15 is something that they're going to graduate towards, and not many municipalities have gotten up to the 15 level. But I think Fresno's at 14, and I think what it means is for us that brands and these restaurant operators and retailers, they're going to have to operate as financially efficient as they possibly can. And so these types of forces, whether it's, COVID displacing their in-store traffic or regulation increasing costs, I go back to what I call the greatest marketing experiment that no one ever talks about. And that is the fact that sports advertising was basically turned off from March through June of this year. Mm-hmm. And I know of a lot of brands who spend tens of millions of dollars in that period of time, from March Madness through the NBA playoffs, et cetera, blasting their fast food brand or whatever through sports advertising venues. We have the privilege of seeing a lot of data. I can tell you that, the biggest head scratcher for us at Mobivity is we're looking at that going, that really didn't impact sales at all. Mm-hmm. You basically didn't have 40% of your marketing budget being spent and your sales were up, in the middle of a pandemic or whatever. So I think what I'm saying is that, that your restaurant operators are going to say, hey, restaurants operate like 15, 20 points net income. You can't take, and labor is one of my biggest costs, and increase that, you double my labor costs and expect me to be profitable. But I would argue that there is so much wasted marketing spend in other areas that that it will absorb that. And tools like what our products provide are going to create that awakening. And I think are going to allow brands to to be successful despite the fact that things like minimum wage might be going up.
Yeah, I think companies evolve. They evolve. When COVID-19 came along, a lot of companies found ways to save money, right? They whether it was reducing debt, cutting expenses, adopting technology to make themselves more efficient. So I think this is a similar kind of thing here. Like if you want to survive, you got to adapt and you got to find ways to do that. And I think your solution helps them do that probably to some degree here. So
we can help them solve a lot of problems, but also give them all the data that they need so that they're actually making informed uses of a text message, making sure Maj gets the right message at the right time that produces benefits to both you as a consumer and the brand to get you to spend more while you're getting more value of your relationship with the brand. And there are a lot of brands that still do paper coupons. And if you just did the simple math and you said, hey, if a brand's paper coupons are 10% of their business, and 10% of those coupons are misused, they were redeemed after the expiration date, or they were redeemed more than once and they weren't supposed to be, they were supposed to be one-time use only. Just do the math on that. That's a lot of money.
Yeah.
You're talking about, in the restaurant industry where you're fighting for, they call it same store sales growth. You're fighting for 2 percentage points same store sales growth, and 1% of your transactions, you're losing 1% of your revenue to wasted coupons because you can't track anything.
Right.
That's a layup right there.
Absolutely. Yep. Excellent. All right. So this is a longer question here. So just Give me a second as I go through it here. So a lot of investors love the story angle to investing. They connect with the story, stock, and a company telling what the company's telling. Sometimes that is a sector related situation or a trend, or maybe even a pop culture related situation. Whatever it may be, it keeps investing interesting. As a CEO, and since we last spoke, is there anything you're looking at as a potential game changer? Founder CEOs have a unique perspective within the company, especially when it comes to the story of how you got to where you are today, and how do you feel today versus when you started the company?
Mm-hmm. Well, I think that one of the things that I'm most excited about, and we got our feet wet a couple of years ago, but now more than ever is where I think that this is relevant, and that's with cryptocurrencies. And I'm not using that as it's obviously it's getting a lot of media attention and things like that, but I truly believe that the technology has a lot of application. What I'm very excited about is where we are focused on right now in the restaurant convenience store space. Digital ordering is now become a really big deal. It's a health risk to go into, I went to a store the other day, got my sandwich, ordered it online, walked up, and there's a line going out the door, going down the sidewalk. And I'm sitting there thinking, everyone's kind of uncomfortable. It's like, you didn't use the digital ordering. If you just use the digital ordering, you'd be like me, walking up, skipping line and grabbing your food. But if you're a cash payer, you can't do digital ordering.
Mm-hmm. Right.
And in the markets that we serve right now, at least in our current phase of evolution, the quick serve and fast casual restaurant space, most of those brands, at least half, are still cash only.
Mm-hmm.
And what crypto currencies can finally bring to the table is another form of digital payment that might make digital pay, because in order to order remotely, you've got to submit some form of digital payment. But if you don't have a credit card, just last week, MasterCard announced that they're going to start accepting certain cryptocurrencies on their processing network. That's huge.
That's really big.
Because now if you're a merchant and you already accept credit cards, then accepting Dogecoin or accepting Bitcoin might be just like accepting a MasterCard. You're already set up to receive payments there. So, most of these digital orders are happening from the mobile phone, and we think we can play a big part in that. Like I was saying earlier in the call, when we first started the call, about how when you open up your Subway app and you've got offers in your virtual wallet, or you get an email from Subway that gives you $2 off a sandwich, that's a currency. Mm-hmm. And that's all powered by Mobivity. So we already have kind of the apparatus technically within our product to help power, the acceptance of digital payments, and play a big part in how cryptocurrencies can provide a solution to an important problem, in this whole digital transformation process that's going on out in brick and mortar. How are you going to allow for the unbanked to make a digital payment without having to apply for a credit card or a debit card? Crypto is a perfect solution. And if Mobivity is already processing a coupon, there's no reason we couldn't process, crypto payment for merchants as well. So I think it's very real this time. Like I said, a couple of years ago, we were looking at working with some brands to use blockchain technology for loyalty solutions. But, now in the middle of COVID and this whole digital ordering revolution, it's got, newfound relevance and importance.
Excellent. Well, thank you very much, Dennis. I think you're a hard stop now. We just made it.
Yep.
So, well, I want to thank you for being here. And of course, this is being pre-recorded, and you can visit littlegrapevine.com to see and view Dennis Becker's original presentation on Little Grapevine, where he goes through a virtual presentation as well as answer some important questions about the company. And then we have a follow-up fireside chat with Dennis not too long after that. So we continue to look forward to talking to you, Dennis, throughout the year, and hearing about your progress.
Excellent. Well, it's good talking to you again.
Thanks, Dennis.